Oh man, sometimes the stock market just makes me want to quit. It just does it sometimes, okay? I got a lot of important things to share with you guys here today, a lot of important things to show you, a lot of thoughts and things like that. But first here, you got to hear me vent for a moment, okay? Because I got something I need to get off my chest here, okay? So this was top comment on yesterday's video, and it said, look at your dividend portfolio. Think about how little you worry about it, how little stress it gives you, and how well it's performed. And I thought about that, and I saw this comment. It was top comment, and it had over 200 likes, and I was like, man, that's so right. And then today happens, right? And all my other portfolios, Red Dead Redemption out there, and there's the dividend account, up $1,800 here a day, and it's performed great. I mean, it has performed absolutely amazing, and this isn't even accounting for all the dividends received. And the thing is, I don't even put in any work to this account. I don't worry about it. It doesn't matter. I don't think about it. I don't stress over it. And yet, look at this. I mean, just look at this. And it's like, you guys ever played a sport or something, or like shot hoop at the park or something like that, right? And you're like trying so hard, and then you stop trying and you start just messing around, and then the ball starts going in the hoop or something like that. That's how I feel in this situation, where it's like, I cared so much about a stock. I drove all around and went to every store for 6 months, 12 months, whatever. Listened to conference calls 3, 4, 5 times. It's a $2 chuck. And then I got other companies I own that are much smaller positions, and I never stress about them. I never worry about them, and they just do their thing. Elf on a Shelf is another great example of that. Elf is probably up a huge again today. Like, Elf goes up every single day. And it's like, unbelievable, man. Unbelievable. But that's the stock market for you. Sometimes it just feels like, sometimes the stock market starts to feel like, is it trolling me? Like, is it trolling me at this point in time? Because sometimes it just starts to feel like that. So if you ever feel like that, just know you're not alone out there, okay? You are not alone. Alrighty, guys. So let's get into this. Hope you enjoyed today's video as always, okay? First thing up here, am I the only one that gets creeped out by this? A report comes out yesterday that retail investors sold $3.1 billion worth of stocks in the last 5 days. First off, for retail, that was a really big number. For institutional money, that would be like nothing. But for retail, that's a big number. Now, here's my problem with this, and this is a big problem for me, is where are they getting this number, and why are they leaking this number out all the time? That really bothers me, because it almost makes you feel like, these folks on Wall Street are maybe potentially looking in your portfolio, right? And looking in everybody's different portfolio. And maybe there's a way they can aggregate all that data, and it shows them exactly how much money retail folks have in this stock versus this stock versus this stock, how much is on margin. And maybe short sellers have access to some sort of data, and maybe they can short based upon this data they look at, right? And understand, we could create a margin call with these folks if we tank this stock and this. It's in the market already, there's distrust in the market, right? And people get frustrated with the market because stocks go down, right? And sometimes stocks go down a lot, and sometimes they go down and it doesn't make much sense. And you're like, if my company's reporting great earnings, why is the stock going down? This happens. And things like this, I just feel like it creates more distrust in the system, because folks look at this and they're like, well, why is this information getting out there? Why is it being leaked like that? Like, who's looking at portfolios? Who's got access to what? Just seems a little creepy sometimes, okay? Now, really good news. This is really good news. Crude continues to drop. Now, I pulled up a year to date for crude, and I mean, we'll see what happens, but it's a possibility crude goes negative on the year, which is almost shocking. And you know what? That is shocking for every single person on Wall Street, because there's never been a year where I've watched as much CNBC as this year. I'll have it on for several hours a day, and I hear all these Wall Streeters go on and talk about different things, okay? And I can tell you, there's nothing I heard Wall Streeters pump more for the last number of months than crude oil, and own the oil and gas stocks, because that's where all the money's rotating. That's where you're going to make money. And it just hasn't played out at all. And all these folks were saying, do this because it's a short-term play, but it hasn't worked at all. There was a massive kind of spike up earlier in the year when a lot of people still weren't on that wave. Then by the time everybody was on that wave, Wall Street was coming out saying, buy oil and gas stocks, but, crude's going to pump, and they gave all their reasons, and some of the reasons were actually fairly decent. But at the end of the day, it's a commodity. And you got to understand about crude oil, especially when you get into wintertime, a lot of times it's not trading high. Right here, why did crude go so high? Yeah, I think that's a good question, right? The reason crude went so high is because of, obviously, the Russia-Ukraine. First reason, okay? Second reason why crude went so high is everybody was hyped up about the revenge travel summer. And everybody's going to hit the road, everybody's going to be traveling everywhere. It's the first summer of back, everything's open in the United States again, right? And so everybody got all hyped about that. Plus there was Russia-Ukraine. And so this is why crude went insane. But the problem is, once you got rid of those, and this is what Wall Street failed to recognize in this situation. These are supposed to be short-term traders, so you think they would figure this stuff out, but they can't, and they didn't. And they still kept piling in. They piled everybody else in for literally no reason, for just losses. And it's in that whole situation. At the end of the day, when both those bullish vectors went away, right, what'd you have left? Maybe OPEC's going to cut or something like that. It's not enough. You need something big to happen to get oil to continue that insane rally and go to, 130, 140, 150, something like that. If you didn't get something big, and as we got closer and closer to fall time, you were going to continue to drop that price. And I spoke about this a million times, right? And I don't know, it amazes me that they didn't see this coming. It baffles me. But this is great news for inflation. This is great news for transportation of products around the United States of America. This is great news if you own any companies that have to transport product around. This is great news, okay? Great news. Tesla, my Esla. We've got to talk. So this stock is down another almost 3% here today. Is now down a whopping 55% year to date. 55% year to date, and Tesla's reported the most amazing numbers pretty much the entire year. Wow, the sky looks absolutely beautiful right now. I wish I could show you guys. It looks insane. Tesla's reported the most amazing numbers this entire year. The only company I can probably think of that's a massive company that's reported maybe better numbers is Apple. That's it. And actually, those are probably two of the only companies that have reported amazing numbers this entire year. Microsoft's been pretty good as well. And here you are in a moment where the stock's down over 55%. But I'll put it to you like this, okay? And I'll show you what I posted in the private stock group last night because I thought it was interesting. Tesla's a trick-or-treat stock, and we're going to find out which in 2023 because things look really compelling at face value, right? And I posted this. I said Tesla, are expected by analysts, or they're expecting revenue growth of about 40% for the company in 2023. Amazon, on the other hand, analysts expect them to grow about 10%. Tesla's expected forward PE, based upon what analysts have them doing, is a 35, while Amazon's at a 45, based upon what analysts have them doing, right? And I said the wild card is, how do these companies perform in a medium to large recession? And, 2023 might be the biggest trick-or-treat year ever for Tesla. And we've got to see what happens here with Tesla. And I'm going to probably start buying the stock again for the first time in a long time in 2023. But I'm not necessarily bullish on the short term for Tesla. I got to be honest, and I haven't been bullish on the short term for Tesla for probably almost 2 years now. It's been at least probably a year and a half or so. I haven't been bullish, but I continue to kind of be in that camp in the short term. And the reason being is I look at it and we don't know how Tesla's going to perform if production slows down in a major way. And something I just am trying to explain to everybody out there is one of the big reasons Tesla's margins have been insane, why they've had this ridiculous profitability, isn't just from demand, isn't just from cost savings and things like that. But when you're running a manufacturing company and you have these production lines, the best thing for you is to be full go all the time. The worst thing for you is to slow down production in a major way. That starts to kill profitability, and that starts to kill margins. And so what I'm looking at with Tesla is I am thinking about what happens if the economy really falls off the rails here, orders really dry up in a major way in 2023, and the backlog starts to die down. And next thing you know, they're not selling every car they produce, or well, technically you're always doing that, right? But it's taking a lot longer time to do that. So that's something I'm considering, that's something I'm thinking about, and either everybody's gotten overblown in this situation, or maybe they're onto something, right? But I think there's one other problem with Tesla that's much bigger than that, because I feel like this is such a sophisticated problem. I feel like most people aren't even on that. I think the biggest problem with Tesla stock here in the short term is the fact that I have to go on CNBC and the top story is that Elon Musk is spending all night at Twitter and spending all this time at Twitter, and he's firing employees and he's asking engineers to come in and this and that. The bottom line is this is not ideal. No, it's not ideal. It's horrible. I mean, at the end of the day, us Tesla shareholders, one of the reasons we're in that stock, right, is because of Elon Musk and the fact that he runs that company. But here he is, he's spending all his time over at Twitter, and we're like, is there nothing to do with Tesla? Can't we be over there doing something, right? And so it's a horrible look. People are frustrated by it. There's, everybody's on Elon Musk now at this point in time. There's a political party that really wants to come after him now, especially with everything that's kind of happened with the whole Twitter situation, right? So it's a mess, man. It's a mess. It's very frustrating. And the only thing us as Tesla shareholders can hope, and the key word is hope, is that eventually he, gets out of that CEO role at Twitter and he basically just focuses back on Tesla in 2023. But because it's not a good situation. It's not a good situation at all. And who knows when he's going to stop paying his attention over there and get back over the Tesla side. So it's definitely a frustrating kind of process there, right? Big tech stocks. So today's interesting because it almost feels like a lot of 2022 has felt, where you have everything Red Dead Redemption and Apple green. And that's a lot of what's happened this year. The amount of trading days where I'll open up big tech watch lists and like almost everything will be Red Dead Redemption and their Apple will be green. It's a lot of trading days. And here we are in that dynamic once again, okay? Apple's got their own problems they're going to have to work through in 2023 in terms of consumer demand, in terms of business demand. Think about how much the Mac business has outperformed over the last many, many years, right? And part of the reason was everybody being forced to be home to buy new devices. The other component that not a lot of people think about, and this is very important, is the amount of businesses that just have a lot of money, and so they don't mind buying their workforces brand new MacBooks and brand new Macs and all those sorts of things, right? And obviously, we know spending in all those fields are going to likely to dry up in a massive way in 2023. And so, what does that mean for Apple's Mac business, for instance, which is a huge component of that, right? The services business has slowed to a grinding halt now at this point in time. And iPhone, are they going to be able to put up another record year in 2023? I have my doubts. Plus, they have the whole China situation. So, I continue to just look at Apple. I'm not short the stock, but I continue to look at it, and I'm just like, it's been the hideout play in 2022, but I am very concerned that that's going to fall to pieces in 2023, okay? Now, this is interesting. Home sales fell for the 9th straight month in October as higher mortgage rates scared off potential buyers. Yeah, this situation is not going to get better. It's going to get worse before it gets better when it comes to housing, when it comes to real estate. I honestly think we've got at least 1 year, if not 2 years of pain ahead in the real estate sector, which long-term is going to be a benefit to, I think, a lot of folks out there, unless you're going to sell your property. If you're going to sell your property over the next 1 to 2 years, you're not going to be in a position of power. You will be in a position of weakness, and likely massive weakness. The best case scenario is only regular weakness. But, that's something I look at. I think that's important. Rent growth slows to the lowest level in 18 months. I really think it's very likely rents could start going down in 2023 at some point in the year. I'm already looking at some of the hottest markets, which I spend my time, and I have my properties in obviously Vegas and Phoenix. And I already look at these markets, and these are markets that I'm telling you, if you want to sell your house, let's talk about that first. You have to price massively lower than when you entered this year. If you want to rent your house, you're going to have to price lower than where things were at the beginning of this year. I just rented out a property, thank goodness. And that property, I way undercut, I way underpriced. And I was able to fill that in a decent amount of time. If I had been at a much higher rate, I can tell you, it would still be sitting on the market and I still wouldn't have anybody even interested in it. If I would have went at what they said the market rate I should have got for that property was, I was like, no, I'm going to underprice and we'll actually get somebody in there. Because I look at all these listings, and you can pull it up on Zillow, you can look at all listings, around different areas, maybe around your area, or look in Texas, look in Houston, look in Austin, look in Dallas, look in Phoenix, Arizona, look in Las Vegas, and look at how many properties there are to rent. And a lot of them are just sitting there collecting dust and will be for a while. But it's going to get even worse, okay? It'll get actually much, much worse when it comes to trying to rent out a place, okay? Look at this. This is new privately owned homes under construction. And we are off the charts. But the thing is, no one's realized this yet, and I'm going to keep calling this out. This is fake demand. It's fake demand. The demand's not really there. We learned this. We learned this last time. And people thought this was real demand as well. Almost everybody thought that was real demand. It's gotten even worse. This is not real demand. This is fake demand. We don't need all that ridiculous amount of new homes they're building right now. And you're going to likely see a lot of foreclosures for a lot of these new homes because people are going to realize the homes are going underwater. The situation's getting worse. And it makes more sense to walk away in some situations than to keep. And that's something we obviously witnessed, in the last housing downturn. The best case scenario, I think the best case scenario is home prices only drop 20% or so. But I'm looking around markets like, Vegas, for instance, and I'm telling you, the numbers aren't showing it. But I'm telling you, the market there is already down significantly. Because if I'm going to list a property in Vegas, I'm telling you, you've got to list it 20, 30% lower than when you started this year. It's not showing up in the numbers, but I'm telling you, that's just the facts around that, man. Go try to list a $600,000 home in Vegas right now. And I'm telling you, you're going to need a way undercut than where you would have been able to sell that at the beginning of this year. It's just the way it goes. So, when I look at the amount of apartments, it's not like magically everybody moves to the United States of America. It's not like magically we've got, 50 million more people live in the United States of America overnight or something like that. Didn't happen. And yet you see massive amounts of apartments being built everywhere, massive amounts of condos being built everywhere, massive amounts of homes, like the most homes ever, right, being built right now. Did magically everybody move here? No. It's because of the wealth effect. And there was a lot of cheap money out there, so it was build, 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 right? Plus everybody was moving, and it gave this false illusion that this was going to continue. And it's just not. And so here we are in a very interesting dynamic, and it's going to kill the construction industry for several years. That's what's going to end up playing out here, okay? Now, when it comes to housing and trying to bet against housing or something like that, learn from Michael Burry in this situation, because Michael Burry, he was wrong about timing. He was very wrong. If you know anything about the Michael Burry story and him in his big housing short, he was way early on that. So was he right in the end? Yes. But the fact is, his timing was not good at all. He was several years. He started his position several years too soon. And, housing takes time. It takes time to start going up, and it takes time to start falling apart, essentially, okay? And so the thing we can learn from Burry is it doesn't always happen on, at the exact time you're planning on. Sometimes it can be 6 months, 12 months, 18 months later. With Burry in his situation, he had investors trying to pull money left and right. And he had investors that are like, what are you talking about? You're betting against the housing market. And then the housing market kept going up. And he's like, no, we're right on this. We're right on this. And eventually he was right, but he was early. And so that's the thing that, everybody's just got to understand about housing is sometimes it takes a little bit to play out in the whole situation. The dominoes start falling, okay? Now, in terms of the market, Wall Street bonuses plunge as much as 45% for bankers. So I thought this was very interesting, right? Because, I think everybody's starting to give up on the year-end rally now that we've had going because it seems like it's starting to fizzle out here. But, don't worry, Wall Street needs their bonuses. It's been a light year on Wall Street, and at the end of the day, whose money is this? Is it Wall Street's money they're plugging out there in the market, or is it investors' money? Think about that for a moment, right? And so yeah, if the market gets a little momentum again, don't be surprised if Wall Street just piles on that baby and collects a little year-end bonuses. Okay. Now I showed this inside the private stock group. I think it was a day ago or 2 days ago. And this just looks at commodities over the past 6 months. Almost everything's moving in the right direction the past 6 months. So that's good news. And it will help across the board with everything, okay? And so whether you're a company that has any commodities as, factors inside the cost of your business, or whether we're talking about inflation numbers, this will just continue to help and help and help. And we honestly need these commodities to just continue to go down and down and down. And everything's moving in the right direction when it comes to that. Okay. I thought, I saw Mav's video last night. I thought he brought up a great point in his video. And what he was talking about is he was basically explaining, like, the faster we get this pain over with, like, the more we're going to have a nice recovery out of this, right? And so the Fed doesn't want the stock market to go up right now. The Fed wants financial conditions, obviously, to continue to be very, very tight until we get inflation to some sort of appropriate number, right? And so the faster that happens and the faster we experience that pain, the faster we can get over this kind of rough time period and have some fun again. And so I thought about that and I was like, yeah, that makes a lot of sense, right? Just keep financial conditions very, very tight. Continue to have this market just be in a tough place. And the faster we get over that, the faster we can have some fun. If, financial conditions obviously loosen in a massive way, then we can just set ourselves up for more pain 6 months from now, 9 months from now, 12 months from now, 18 months from now. So yeah, it's kind of like, do you want to have some fun, so long-term fun, or do you just want to have a little bit of short-term fun and then feel more pain? So I think that's just a factor to kind of think about. And I'm kind of on the side of, let's just get it over with in regards to all that. Okay. Now I posted a video 19 hours ago that went into depth on Amazon versus Meta versus Google and went into their income statements, balance sheets, business models. And because I know a lot of people are wondering, like, what's the best buy of those three stocks, because all of them are down massively. And so we probably got a 3 to 9 month window to add stocks like that. And so that video went really in depth. So I hope you guys enjoy that if you didn't get to see it. And I thought it's just a different video, and it might be a weekly series. I don't know. We'll see what happens there. Appreciate everybody joining me as always. Thanks to everybody that subscribed to the channel. Also, our once a year Black Friday sales coming up for joining the private stock group, getting access to the private Discord chat, all my different course curriculums, the community, everything like that. So if you've ever wanted to be a member of the private group, you also get exclusive videos. Check out the pinned comment down there, and we'll send you over the deal as soon as it drops on Black Friday. Much love and have a great day.